Welcome friends, in this video we are going to analyze the Xcn coin. Will a big pump come again? Don't forget to subscribe, like, and please watch to the end to understand. When we take a detailed look at the chart, we can clearly see that the price has exhibited a strong uptrend for a certain period of time in the past. After this upward movement, the price entered a period of sideways movement where market participants were indecisive for a while and the price struggled to determine a clear direction. The price was stuck here for a while, neither falling sharply downwards nor breaking out to the upside. Such periods of horizontal consolidation are usually an indication that the market is looking for a new direction and gathering strength. This structure, especially in the past chart, offers us important clues when analyzed carefully. Because immediately after this horizontal movement in the past, we witness a strong upward explosion in the price. Such strong bounces are considered to be extremely critical signals in technical analysis, as they usually follow prolonged squeezes. Now, when we turn to the current chart, it is possible to observe that a very similar structure is once again forming. When we look at the current price action, similar to the previous period, we see that after a significant rise, the price is stuck in a horizontal band for a while and cannot determine a clear direction. The price is currently moving in a structure quite similar to that resting phase in the past. This observation is very important for technical analysis. Because although history doesn't always repeat itself in exactly the same way, we know that price movements tend to repeat certain patterns from time to time. Especially during periods of similar market psychology, investor behavior can produce similar results. Therefore, the likelihood that the big rally that followed a horizontal consolidation in the past will repeat itself in the current situation is not to be underestimated. If the price completes this sideways movement and realizes an upward breakout, it is highly likely that there will be a strong bullish wave as in the past. Especially if there is a permanent close above this squeeze zone, it becomes clear that buyers are entering the market strongly again, which can quickly move the price to higher levels. The rallies that follow such squeezes are usually volume-driven, and we can see significant price movements in a flash. Therefore, this horizontal band period on the current chart should be watched carefully. If the price makes an upward breakout from here, it is quite possible that we could see a strong and impressive bullish move, just like in the past. In this scenario, it is possible that the price may not only break the current resistance levels, but perhaps even target new highs that have not been tested before. In conclusion, a similar bullish and consolidation scenario to the past seems to be unfolding on the current chart. If history repeats itself once again, and the market breaks out of this squeeze to the upside, it could be a very lucrative period for investors. But we need to look not only at this, but also at other metrics. Stay tuned. When we analyze the chart in depth and evaluate it in line with the core principles of Elliott wave theory, we can clearly see that the price movement has now entered the third wave phase. This is considered a highly critical development in technical analysis, as according to Elliott wave theory, the third wave is the phase where the strongest and fastest uptrends occur, representing the most decisive continuation of the trend. This wave is seen as the stage where both investor confidence and market momentum reach their peak. The first wave, which occurs initially, typically signals the beginning of a new trend, while the second wave is a natural correction against this initial rise. Currently, we can observe that the second wave has been completed in a healthy manner, and that the third wave has begun with strong momentum. From this point onward, Fibonacci extension levels provide valuable insight into the potential target of the third wave. Theoretically, our minimum target is a movement equal to 1.618 times the length of the first wave. This 1/618 level is the most classic and frequently observed extension ratio for third waves. However, it should not be forgotten that third waves can sometimes show excessive strength, reaching extensions like 2/272 or even 2/618. In particular, the current price structure suggests the beginning of a third wave backed by strong volume. If this volume increase continues and momentum is maintained, the target for the third wave may extend beyond the 1/618 level and reach up to the 2/272 Fibonacci extension. In the case of an even stronger trend, we must also consider the possibility of an extension up to the 3/272 level. Another important point to consider here is the psychological impact of the third wave on investors. Third waves are typically the phase where market confidence peaks. Participants buy with great enthusiasm, and FOMO, fear of missing out, reaches its highest level. As a result, price movements can occur very quickly and sharply. This highlights once again how important it is for technical analysts to identify third waves early. Additionally, volume analysis also appears to support the structure of the third wave. Increasing volume during the uptrend indicates that the price is moving organically, and that real buyer interest dominates the market rather than manipulation. This is a factor that will make the depth and strength of the third wave even more effective. In conclusion, when we look at the overall technical outlook of the current chart, it is possible to say that the price is still in the early stages of the third Elliott wave, and that there is significant ground yet to be covered. The minimum 1618 target should definitely be taken into account. However, we should also keep in mind that the upward potential may expand further, reaching advanced Fibonacci extensions such as 2,272 or 3,272. The structure of the market, the state of momentum, and investor behavior will be the guiding factors in determining whether these targets can be achieved. Therefore, the coming days and weeks will be quite critical in terms of price action. If we continue to see price momentum that aligns with third wave characteristics, we may witness some very impressive rallies both in the short and medium term. When we carefully examine the chart, especially focusing on the Bollinger Bands indicator, we witness a highly significant situation. It is clearly observable that the bands have tightened considerably. Such a contraction of the Bollinger Bands indicates that market volatility has decreased significantly and that price movements have remained limited for a period of time. This situation is often interpreted as a calm before the storm signal in the market. In other words, there is currently a buildup of energy in the market, and this energy is expected to be released forcefully in one direction very soon. According to Bollinger Band theory, a major price movement usually follows the narrowing of the bands. The direction of this movement is typically estimated based on the current technical structure, trend, and signals from other indicators. Looking at the current technical setup, the potential for an upward breakout appears to be high. This is because the price is currently positioned close to support levels and is also giving signals that indicate it has been in an accumulation phase recently. It should also be noted that when the Bollinger Bands tighten, market participants often begin to grow impatient. If this is combined with an increase in volume, a breakout movement beyond the bands can occur. If this breakout is upward, it can initiate a strong bullish wave. On the other hand, if the breakout is downward, sharp and sudden declines may be seen. However, the current chart structure and the general positioning of the price suggests that an upward breakout is more likely. The fact that the bands have narrowed this much also presents an attractive setup for investors in terms of risk-to-reward ratio, because when the price is squeezed within a narrow range, it allows for reasonable stop-loss levels and the potential to maximize gains from a large upcoming move. Another notable aspect is that the movement following this contraction often not only creates a short-term impact, but can also determine the medium-term direction of the trend. So, a breakout here may not just result in a few days of increased volatility, but can also serve as a critical milestone in terms of price direction. To summarize, in an environment where the Bollinger Bands have contracted this much, being patient and cautious is of great importance. There is currently a compressed, direction-seeking energy in the market. The direction in which this energy is released will shape price movements in the coming days. In light of the technical outlook and other supporting indicators, an upward movement appears more likely. However, it is of course wise to be prepared for both scenarios, as markets are always open to surprises. Act with the knowledge that a breakout is imminent. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.